May I now request our chairman to welcome the Honorable Minister of State by presenting a bouquet. May I now request the chairman to present a bouquet to Mrs. Srivastava. And to Mr. Ono Rule. May I now request our Member Finance, Mr. R.V. Verma, to give his welcome remarks, please.
Honorable Minister of State Finance, Shri Jayant Sinha ji, PFRDA Chairman, Shri Contractor, Mrs. Snelata Srivastava, Special Secretary, Department of Financial Services, Mr. Ono Rule, Country Director, World Bank, and my colleague, Dr. Bhandari, all the senior officials from the government, banks, financial institutions, our friends from the print and the electronic media, ladies and gentlemen. It's indeed my pleasure and privilege to welcome the Honorable Minister of State to this event. A very warm welcome to all the guests this morning. This is the second pension board, a lot more players, a lot more stakeholders and partners in this initiative. We had the support from the Ministry of Finance, other ministries, the Government of India, and the state governments. We did cross the 10 million mark in terms of the number of subscribers in November 2015. And we also achieved the important milestone of 1 lakh crores in terms of the AUM, that is 1 trillion Indian rupees. Encouraged by these achievements, of course, we plan to further expand the coverage of the NPS. In constructing this program and in deciding on the theme for this conference, the mandate of the PFRDA was uppermost in our mind. Combined with that, of course, the vision of the Government of India to have a pensioned nation, to have India as a pension nation, was important. We also have built in the structure of the program some of the recent experiences amongst the European countries in terms of stability and sustainability of the pension regime, and learning from their experiences. In our near-term agenda, we have certainly plans to expand and reinforce our activities. The NPS reach to the subscribers, ease of business for the subscribers, IT enablement through digitized platforms are also very important agenda for us. In all this, we are also exploring the remits for the PFRDA. It's a regulatory and supervisory remit actually, and will endeavor to reach out and cover the uncovered gaps which are marked by regulatory gaps and overlaps, and see to what extent we can actually cover that. The mandate for the PFRD is very clear, sir, and we recognize that and we respect. Maybe going forward, we certainly need some support as the pension industry is in its very nascent stage, and for it to grow along sound and sustainable lines, we really need fiscal, legislative, and regulatory support. With these words, I renew my welcome to the Honorable Minister and all of you here this morning. Thank you very much.
Thank you, sir. We have with us today Mr. Ono Rule, Country Head India World Bank. Mr. Rule brings with him a rich and diversified international experience in the field of private and financial sector, engaging with all layers of government and civil society. May I request Mr. Rule to address the delegates and share his views, please?
The Honourable Minister of State for Finance, Mr. Jayant Sinha, Mrs. Srivastava, Mr. Verma, Mr. Contractor, Mr. Madari, distinguished guests, members of the press. It's really a pleasure to be here again after last year's first conclave, and it's amazing to see an overflow-only room for a topic like a pension enclave. It's very apt, but it's not what one would typically expect in the early morning in Delhi. There's, however, good reasons for that. We talk in India a lot about the demographic dividend that India has, 1 million young people that join the labor force every month, the challenge of providing them jobs, skilling them, providing opportunity. We have Make in India, Skill in India, and all sorts of other initiatives that certainly will succeed in providing opportunities. But not many people realize that India today already has 116 million people over 60. If anybody realizes, probably this crowd, because many of them are here. But in 2030, there will be 190 million people in India over 60. That's something like the population of Pakistan or Nigeria or countries of that size. It's an incredible number. So it is really great that PFRDA and the government are spending so much time thinking about how India can meet the challenge of the dual demographic challenge that India has, a demographic dividend and an age challenge. And actually, it's obviously much more easy to face that challenge while the country still has a demographic dividend, because it means that there's actually a base to build the system on. But it is not early, and therefore I'm delighted to be here. Now, there's a number of really good building blocks for building this. First of all, the Jan Yojana has really triggered a very welcome change in the way pension systems could be expanded. More than 200 million Indian adults already have bank accounts, and almost half of them are linked to UID, which provides a unique opportunity. I often like to talk about the opportunity that provides for financial inclusion and payment. Financial inclusion, however, has a very important part, which is the pensions, and no other country has what is often referred to as the JAM Trinity, Jan Dhan, Aadhaar, and mobile technology, like India, and it really provides a platform where India can leapfrog other countries and use this opportunity to create a very vibrant system of linking pensions to payments in a practical daily way. Obviously, pension policy is also important because pensions effectively mean long-term savings, which means it will generate long-term funds for investments, which India needs very much, particularly, of course, for investments in infrastructure. And the thinking around that is equally important. Now, because of, first of all, the vision of the government and the desire to work on this in our partnership with PFRDA, but also the unique opportunities, we were really very delighted to be asked to support PFRDA in a technical assistance mode to help think through how some international experience could help India build a pension system that meets all these challenges and uses all these opportunities, and very importantly focuses on a challenge that is particularly important in India, which is the challenge of creating the hope for a pension for those in the informal sector, which, as we all know, is between 80 and 90% of people in India. For them, retirement is just a dream. There's no option but to work until the very end. And to find a way to use these unique features that I talked about to build a base pension for that group is, I think, a very, very important goal that will serve India very well in the future and be a very exciting innovation, because no other country has managed to do that, but India can actually do that by its actions today. I'm therefore delighted to note that based on the request that we received, we've managed to secure funding from the FIRST initiative, which is a beautiful acronym for a global fund that we can use for technical assistance like that. The team is actually here working with PFRDA. We hope it will be useful. We're very optimistic that India will make great strides in this field and actually do things that might surprise the world based on some of the features that I have. And therefore, it's a delight to have been here this morning. Thank you very much.
Thank you, sir, for sharing your views with us. We are confident that we would continue this mutually beneficial engagement in future also. Now, may I request our chairman, Shri Hemant Contractor, to address the conclave.
Honorable Union Minister of State for Finance, Shri Jayant Sinha, Special Secretary, Department of Financial Services, Mrs. Srivastava, Mr. Ono Rule, and my colleagues on the dais, Mr. Verma, Dr. Bhandari, distinguished ladies and gentlemen, and members of the press. It's almost now, a little more, in fact, than 2 years since PFRDA became a statutory pension regulator. And to celebrate the first anniversary, we had a similar program in 2014. And we've spent the better part of these 2 years since we became a statutory regulator in setting up the edifice and creating the infrastructure to discharge the responsibilities cast on us as a pension regulator, which is namely that of promoting and developing pensions in India, as well as supervising and regulating the pension sector in the country. And in this process, what we've done is we've passed a large number of regulations in the last, most notably in the last 1 year or so, almost 15 regulations, which touch upon every aspect of the pension sector in the country, and which clearly define the roles and the responsibilities of the various stakeholders in the pension system in the country. And this was meant to give comfort to all the stakeholders and all the intermediaries in the system, as well as our subscribers, about the regulatory framework in place for the pension industry, which should help to give them comfort in joining the pension sector in the country. In the last 1 year or so, we also set up a proper governance structure in PFRDA. We now have a proper board, a full board, and all the other requirements of a sound governance structure are in place here. So we've spent a lot of time in putting in place all these things. But besides that, the last couple of years have also been spent in sprucing up the pension product and streamlining the processes and systems to make pensions a much more user-friendly product. And in the process, we've also started relying a lot more on the fact that people are resorting to more and more of use of mobiles and online systems and all that. So we've tried to now provide this option to people joining the pension system. And I'll just give you a few examples. So in the process of enrollment in the pension schemes, in the NPS, we have put in place an online registration model, which has been working for the last couple of months or so. And you only need to have a PAN card and a bank account to join the pension plan. And currently, there are 15 banks which are members of this online registration process. And there are still some large banks who have yet to join, and I would request the other banks also to join in, because this does provide a very easy solution for people who wish to join the pension and the NPS program. And we've also put in place an online payment gateway in the last 6 months or so. So there we have about 35 members. We've tied up with the State Bank of India to provide the payment gateway, and about 35 odd banks have joined in. So anybody can use the portal for making their contributions online. So we've started doing these things and making it a lot easier for people not only to join but also to make contributions. And going forward, we'll be putting in place a few more innovations and modifications to make the product as user-friendly and as customer-friendly as possible. For then in the process, in the last 1 year or so, we've also been paying attention to the investments, the places where the contributions, the pension contributions are deployed. And we put in place a number of changes, a number of improvements. Because one of the concerns that we have as a regulator is the safety and soundness of the pension schemes. And we've been constantly modifying, reviewing the portfolio to see that our subscribers get the best possible return for the risk that they undertake. And in the process, we have introduced a number of new products in which the pension funds can put their money in. As it's, just to name a few, we are now allowed the pension funds to put the investments in REITs, that is the Real Estate Investment Trust, the investment trusts, IDFs, Basel III Tier 1 bonds. So these are some of the new instruments which we have now permitted for the funds to be deployed. And going forward, we have plans to introduce some more products where the pension fund money could be deployed. So this is an ongoing exercise. We'd like to see the investments earn a good return without taking undue risk. And these new instruments which are now available in the market offer that choice to us. We've also been, in the last 1 or 2 years, trying to make subscribers better aware of the product. And we've been making a lot of use of the social media to keep our subscribers better informed of what's happening in PFRD and in NPS. And the other thing that I'd like to mention about where we have made some change, where we were facing some problems, was in the exit process. We don't have too many exit cases yet because the schemes are still quite young. But the paper-based exit and withdrawal process was proving to be a bit cumbersome. So from 1st April this year, we are putting in place an online exit process which will help to eliminate some of the problems that we've been facing in this. So, these changes and these modifications, improvements and innovations keep happening, and they'll continue to happen going forward as well. And the results of all these efforts are there in the performance of the portfolio. We now have more than almost 11.3 million subscribers now. Our subscriber base has been growing at the rate of about 35-36% a year. But in terms of the funds handled, they've been growing up at the rate of about 65-66% a year. That's good, but there's still a long way to go. And I'd like to particularly mention our performance in Atal Pension Yojana, which was the new pension scheme which the government had launched last year and which the government had asked us to administer. And in 7 months, we've been able to open about 20 lakh accounts. That's 2 million new subscribers. And the banks and the post office, whom we roped in December to market and get new accounts under Atal Pension Yojana, have done a good job. And we are going to honor some of them today for their fine performance. So while the going has been good so far, there's still a long way to go. The pension market in India is still quite nascent. Not a very small portion of the population is covered by any kind of pension cover. It's only the formal sector which really is adequately covered. The informal sector, which actually accounts for almost 85-86% of the workforce, is still very, very scantily covered. And that's where the challenge lies, in reaching out to the informal sector and trying to get as many people on board under pension plans as possible. There are a lot of challenges in this because, the informal sector, as we know, is, there are some features of the informal sector which pose particular challenges to pensions, and these are, most notably the low levels of literacy, the lower income levels compared to the formal sector. And because of the lower income levels, the different priorities that people in the informal sector have in terms of the savings. And which makes pensions actually a push product for the informal sector. We really need to do a lot to educate people about the benefits of investing in pension plans and making them aware of the benefits of investing early in pension plans, so that when they reach their old age, they are not in a state of deprivation. So all this requires a lot of effort. It requires a lot of convincing. Now, there are some people who believe that if you just have a well-designed pension plan, a low-cost pension plan, that would be adequate to market pensions. But our experience is that that's not enough. Because the distribution, being a push product, distribution is a very important part of the onboarding process. And if you want to increase coverage, which to us is a priority area because of the very low coverage of pension in the country. If you want to push coverage, if you want to increase coverage, then distribution also becomes as important as the design features of the pension product. So we are paying attention to these areas also, and we are quite sure that the steps that we are taking will yield good results. But having said that, voluntary pension plans like the ones that we offer, the NPS and Atal Pension Yojana, have some limitations because of the characteristics that I mentioned of the informal sector. I mean, their priorities are different, the income levels are low, awareness levels are low. So voluntary schemes like the ones that we offer have some limitations. And this problem has been encountered in many other countries as well, where they tried to push voluntary pension plans with very limited success. So in many countries, there is now, many countries are now resorting to some kind of a soft compulsion, to get people on board pensions. And this is important because if you don't get people to join pension plans, then there could be problems for the state and society going forward. So you need to get as many people on pensions as possible. And if the voluntary effort doesn't work, then some kind of a soft compulsion would probably be required. We are working on a few ideas on this, and hopefully going forward we'll be able to offer something on this in this area. So, like I said, the story, we have just begun to address the problems, and there are a lot of things yet to be done. But going forward, we are quite sure that with the initiative that we have taken and with the kind of support that we keep getting from the Government of India, we will be able to reach out to as many people as possible in the country and expand and increase the pension coverage in India. Thank you.